Hello guys, welcome back to yet another episode, and in today's video what I want us we get to look into, we get to get into details on a very simple entry strategy that I normally use to dive into the market. And of course, every time you get to use this strategy, you don't see the market having some pullback or even you getting some losses before you can get to proceed into attaining these profits. Once you get to apply this strategy, you just dive into the market right away, and of course the market keeps going upward if you are anticipating a buy, or the market gets to go down if you are looking for a sell. So all I'll just request you is to make sure you pay attention, and of course get to make sure hit the subscribe button, which is just below here, so that you get to receive these kind of lessons each and every single day I get to share with you, and we get to grow as a team. If you get to do this long enough, trust you me, it's going to pay off. The problem is that so many people, they get to give up along the way, and that's what kills so many dreams. So guys, allow me to just dive into my PC and I get to show you exactly what I'm talking about, so that we can get to look into some real examples and how you can get to also execute the same way during your free time. So right now, guys, let's just go to GBP JPY. That's our favorite, of course, currency pair. That's the only currency pair that I normally get to trade. For instance, guys, you can see, if for this case you are looking for a sell opportunity, so you just come here, you get to draw. You just come here, get to draw a trend line like that. And of course, the other important thing, you can see there's a psychological level. There's a psychological level around here. So if you're looking for sales opportunity, you'll just go ahead, you get to wait for it to break, and after it has broken that the trend line, and of course it has to engulf this candle, you can see for this case, and of course get to place your stop loss just above the psychological level, and of course get to target the previous lower low, which is around here. You can see you get to target just the previous lower low, which was around somewhere. Let me just pull it down. It was somewhere around there, and you can see the market could have given you 3 points. That is 3:1. That is 3.37 to 1 risk to reward ratio. So that's just one of the simple ways for you to know when to get into the trade. So another let's just look into another situation, like for instance, for a different currency pair, we have GBP JPY. So for instance, right here, you could have waited for the market first of all to break around here. We normally look for where the market has touched the trend line 3 times. So for instance, you can just get to draw that one around there. You can see the market got to break above here, and of course got to engulf this previous candle right here with this candlestick. And like the reason why we have these long wicks, because we had some news, and of course the good thing is that the market got to break the trend line, retested on the upper side, and of course now it just unfolded going up. So for that case, you could be looking for a situation like this. When you go for long, you just wait for it to break, of course retest, and of course you just place your entry somewhere around there. Let me just show you. You place your entry somewhere around there, and of course get to place your stop loss just below the previous low like that, and of course get to target the next psychological level. And of course, another important thing is to make sure that like for this case, you can see the market was still it's still above the 50 MAs, to show you that the market is still an uptrend. And of course, the other thing is that the fact that you can see the market has been unfolding and heading upward. So that's also something which is very, very important for you to also understand, that you can see we have that the market has been ranging for a while, but you do understand, after ranging market, we normally head into whereby the market gets to unfold. And of course, in most cases we normally see accumulation. We also have manipulation, and of course we have whereby the market gets to unfold. So for this case, you can see how the market got to unfold. So those are just two scenarios, very simple to follow, and I'm sure if you get to look for these opportunities over and over, you'll have an easy time getting to the market. And of course, it's also important for you to take time and back test. So let me just wrap up the video at this point. And of course, as you can see right now here, I'm trading. I'm on a trade. I looked into this market. Unfortunately, I got late before the market unfolded this way. I was busy somewhere else. But what I'm saying is that you keep applying the same strategy. You just need one strategy and of course one currency pair, and keep looking for these same scenarios over and over. So that's it for today, guys, and of course I'll be looking forward to seeing you in our next episode. Peace.